The Central Bank of Nigeria sold Treasury bills at above 17% and released a borrowing calendar with plans to borrow an additional 2 trillion in the next quarter. If you've been looking for how to make 20% and above in returns in your sleep, this news is for you. The US also announced the end of the ceasefire, but oil prices are still hovering up below $80 to the barrel, right? Are we going back to 100? Is this the calm before the storm? Is your hope of lower inflation lost? Let's talk about your investment and financial planning decisions, because they have to be connected to the reality of your environment. So listen in and let's find out where the money is and what you should be doing right now to protect your pockets. If you don't know, my name is Ola, and I welcome you to the channel that serious Africans listen to learn about money, personal finance, investing, and the economy. So if you haven't already, please subscribe and let's get into it. The first news we'll be talking about will be focused on Nigeria. And if you were someone who missed the 20% wave, right, where people were earning investment or investing above 20% return, right, the CBN has literally just come out to say, you know what, take my cup, I'm ready for you. Because literally the central bank plans to sell treasury bills worth over 5 trillion in the next quarter between July, August, and September 2026. And this is after they sold a 1-year treasury bill at a return of about 21%, right, last week. Now, if you are an investor who has cash, this is good news, and I'll be explaining why. You may think about from the perspective of the economy and all that, but let's focus on you as an individual and how you can benefit from this. Of course, if you already own investments or you've invested at 15, just hang in there to mature and hopefully you'll be able to reinvest, right? But if you haven't and you still have cash, let's talk. Or you're planning to get cash. Now, based on this auction calendar and the amount of money that they plan to borrow, if they actually follow their plan, right, yields are going to go up. Let's not lie to ourselves. Treasury bills, savings bonds, FGN bonds, right, and even commercial papers, everything, all the rates are going to go up, even to the rates that your bank account officer is going to offer you. Everything is going to go up. Why? Because as the central bank announced this amount or released the calendar with this volume of borrowing, the debt management office also released last week, and we talked about it last week. If you want to go back, we'll drop the link to also explain that video. We explain what's happening with the DMO borrowing and all that, and the volumes that they are borrowing. So long and short, there's going to be a lot of borrowing, and it's going to be by the central bank and the government of Nigeria. So in essence, if you miss the last cycle of 20%, like, it is here for you to stay. It is here for you right now, rather not even for you to stay. It is here for you right now. So if you missed the last time thinking it was going to go to 30, guys, it may not. Wake up right now, right? This could be your second chance. Now, the question you may want to ask me is, what about the stock market? I mean, I'll talk about what the stock market, if you are in diaspora, should be bringing money in. You know, those are the kind of questions. And if you also have any other questions around this, please also drop in the comment section. We'll be happy to answer either in a video or directly respond to you in comments. So the first question is, what about the stock market? Generally, and I think I said this last week also in the last video, Q3 is usually quiet, right? It's usually quiet because there's summer holidays, people are not that focused, and there's also this back to school expense thing. So a lot of retail investors are not really looking at the stock market in Q3, right? And of course, ironically, because it's quiet, patient investors usually just find interesting bargains, right? And that's just how it is. So with the stock market, with the level of borrowing that has been announced, right, the fact is that the big buyers like the pension funds and all, they would actually at some point reconsider a rebalance of their portfolio to get these higher yields. That's just what's going to happen. So we will most likely see less demand on the equity side. Now, ideally, what's supposed to be that stopgap, what's supposed to be like that frontier listing that's supposed to come up in September, right? That will make people like front load for. But since that has been suspended, we have to wait and see if that will be resolved in time to keep the market up, right? So what are the opportunities that are available? In my opinion, even those stocks that might be quiet, because stocks are generally a long game, they are still an asset for you to consider, right? They're still an asset for you to consider. So from your treasury bills, commercial papers, everything, just know that the rates are going to go up, right? Now, what does that mean? They're attractive. So your responsibility is to now say, which of these should I be putting my money into? Which one suits me? That's what your question will be. But if it's about, should you go into bonds, treasury bills at this time? Yes, don't wait, don't be in a hurry. Even if your account officer calls you right now to say, oh, put your money into this, wait. Or see the repricing clause around it. Why? Because it's just starting, right? It's just starting. Now the next question is, if you're in the diaspora, should you be bringing money in? Should you wire dollar into Nigeria to take advantage of these yields? Because of course we know that the yields abroad are not very, very fantastic. My answer is yes, but with a caveat, right? The economy has done well. The economy has handled the recent oil price shock, and we're going to talk more about that right now, right after this. Has handled the shock quite well. But the real risk right now is not just like the global economy, but we have a local risk in Nigeria of the elections that are coming up. We would say that the economy is more stable than it was in previous election cycles, but we also know that there's a lot of movement of the US of currency around that time, and we're not sure how the currency is going to perform over the period. So that I would say that and I mean, the fact is that with central bank governor still being there and handling things the way he's been handling, we expect that if there will be any depreciation or any form of loss in value, it will not be significant, such that your 20% might end up being like a 16 or a 17 or an 18 worst case scenario. But it's still better than the 2 and the 3 that you're getting where you are. So I would say with caution. I would also say that never put all your eggs in one basket, right? Because we just never know. So even if you're getting the high yield, the lower yields abroad, right, for some stability and surety, there's some benefit to bringing in some currency, right? But with caution, like I said. Now, one of the things I've also realized that a lot of people, like I said, all these things, they're like, okay, Ola, which one? We've heard you. Yeah. What should I really be doing? So we've launched the Money with Light. It's a newsletter service that goes out every Sunday, right? And basically what it is it's just telling you what I'm watching, what I'm looking at, what I think is good, what I would definitely not touch, things like that. And it does come out every Sunday. And the simple idea is that you read it 5 to 7 minutes read on Sunday, and on Monday you effect whatever like jumps at you as this is what I should do, right? It's also a community, so you would have opportunities intermittently to ask questions and stuff like that. But the fundamental starting value is that newsletter where you see what I am doing, what I am thinking. So if you just want that sneak peek into what I am thinking every week in terms of investment, the actual thing, not just explaining, but the actual, okay, with stock, things like that, then the link is in the description. I welcome you. Of course, if you joined the wait list, you have a special discount in your email. If you've missed it, go and check it. It's there. But if you missed that, Otilo. But for the first 100 people that join the community, they get a discount, and that link is going to be valid until we hit 100. Right? So if you're thinking about it, don't waste too much time. Someone is going to get on it and it's going to be gone. We have tried, haven't we? And of course, please subscribe if you haven't already. Now, the markets are actually having an identity crisis, and literally that's where opportunity lies, right? 1 week we're talking about how the NGX has lost value. The next week we're talking about how Aliko has recovered his lost net worth, right? Almost like the money was under somebody's pillow chilling. But the reality is that investing is one place where price and value sometimes on the exchange don't necessarily stay near each other, right? Sometimes they move randomly. But whilst this sell-off was very dramatic, and while share prices were falling, what I wanted to highlight here is that the businesses were still making money. And that's something that I really want us to learn. Even though the stock market might be responding to different things because traders are just buying and selling, right? The fact is that these are real businesses, and it is important for us to look at the business such that We understand that stock prices can be emotional, but cash flow isn't, earnings isn't, profit isn't. Then when we now flip over to the fact that Dangote announced, or the news, there was in the news that Dangote Refinery overtook US in supplying jet fuel to Europe, right? You just see that things are changing, and I think this is really the message here. While there's a lot of noise on the high level, right, if you're an African or an African in diaspora, you need to understand that things are still changing, like underneath where the real life is, right? Now this kind of news is good, for example, because exporting that at that level is bringing FX into the country, right? And it's bringing economic stability, right? And the fact is this, when we talked about the markets last week, we talked about why there was that sell-off, and I mean, we'll point the video up here and then you can check it also in the description. The fact is that 2 out of 3 of the reasons for that sell-off are still ongoing, right? And then when we now add this whole CBN borrowing that we just talked about, then you know that this kind of returns are going to be here for a while. And then if you think about the fact that fund managers sometimes will just sell to rotate their portfolio and rebalance where there's higher surer yield for long term, then you need to understand that some of this selling that you may see doesn't mean that the company is not good. And I think that's what we also need to understand, right? Such that one of the things that you need to be doing as we go into this whole Q3 and going forward is that you need to keep your eyes on the companies that are actually doing well, right? A company with weak earnings will struggle to compete when there is risk-free return at 20%. That's just what's going to happen, right? But profitable businesses that have strong cash flow, that are well positioned, right, they will tell a different story, right? Such that anytime you see a sharp decline in a quality name, it's an opportunity. So what am I saying here? You don't have to choose between fixed income or equities. You should have a balance of all in your portfolio. If you don't know where to start, I've said there's the Money with Light. We also have shop.themoneywith.africa. You can check it out there, where and how to invest. There are little things that you can start off with in terms of resources that we have. But I would say treasury bills are good short term, but be mindful of it's always a cycle. It will come down. So there's a place for bonds in your portfolio. And then of course equities are your capital gain plug. So you don't want to miss any of them, even as you are building wealth, right? Like I said, where to start from if you have no clue. The Money with Light is your plug. Final news is that the war is back. But the market looked at it and just shrugged. I'm like, okay, moving on, right? And I mean, I would like to know in the comments, have you ever sold a stock before because you saw something in the news and you never look back again? And I'm asking that question because President Trump just announced the end of the ceasefire, meaning that the war is back. And the fact is that a few months ago, if he had announced this, what we would see is that what we saw actually was that oil prices went up to $100, right? And investors were scared, right? But what happened this time? Brent crude went up, oil prices went up, but global stock markets did not even respond like that. And everybody just went back to looking at earnings reports. That's the annoying reality of investing, right? And it also feels like, okay, people have that short attention span. But the reason for this is not really about the short attention span, is that the markets don't just price headlines, they price surprises. So something new, they will price something new. Now, what is happening is that what happened really was that when the conflict first started, it was shocking. Nobody knew what was going to happen. Everybody was saying there could be a recession, blah, 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 blah. But realize that, okay, the war has been going on. There's no recession. People are still moving on. Africa has rebounded. Things have gotten better. So that need for panic is not there like it was before. That's literally what's happening. So why am I highlighting this? The fact is this also. Dangote, for example, and other African suppliers, they have supplied the market. So as much as at that initial time there was scarcity, right? There were supply chain disruptions. But what you have seen right now is that people have found a way. And so the impact on the economy is not as much. And so they are now looking back at the fundamentals. So what am I saying? For you as an investor, don't just follow the headlines, look under, right? Because in the end, that's what happens. You will now see that the companies that were well positioned, blah, 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 they will be fine. They would actually be fine, right? So geopolitics may be pushing prices up, but market fundamentals can keep pulling them back when it comes to oil prices. And for you, it's a very important lesson, really. If markets refuse to collapse despite worsening headlines, it tells you that corporate earnings, liquidity, all these things matter more than the drama of the now, right? And that's what happens in the end. So that's why chasing every breaking news alert can become very expensive, especially when you're not an active trader, because by the time you reacted, cheese has moved, right? Or if you say that because they reacted the last time, when these things come out, I will react like this so that I'll preempt them. It's a lie. You have to understand the psychology. And I mean, even for me, because I started my career as a trader, I really can't understand, because when it's a shock, you price the uncertainty. But when you can see a roadmap, you can't treat it the same way because things have changed, right? So what am I saying? Focus on business, the cash flows, the positioning, the growth, where the demand is coming from, the things that actually would say, will this business thrive? Who are the people buying from this business? Who would continue buying from them? Those are the things that matter, right? It might sound like preaching, but if you look at this, and if you just look at what's happening right now, you realize that it's not preaching. You realize that it's actually not preaching. It's playing out before your eyes, because explain why there's no ceasefire, but oil prices where it is. Yeah, explain. So that you know that it can't just be about the headlines. You can't just be investing based on the headlines. And of course, if you are not sure what to do, I've said that there's the money with lights, right? Because the fact is, these are things I have learned in my almost 20 years experience in financial markets, right? And even as a CFA charter holder, you just find that there's a behavioral side to market that responds to shock. And once that shock is no longer shock, everybody moves on, right? So I want to hear from you. What have you learned today from this video? What are you buying? What are you selling? What are you holding? Please share in the comment section, because I really want to hear. And do not forget that you can't outsource your health and your finances. You always have to engage. No one can go to the gym on your behalf and you'll be healthy. Nobody can eat vegetables on your behalf and you will be healthy. The same way you have to engage with your finances. You actually have to get involved and get on top of it. See you in the next video. Bye.